What's up guys, welcome to the channel. In today's video, I'll be covering Ark Invest research on Bitcoin and Bitcoin's fundamentals. So recently, the CEO/CIO of Ark Invest, Cathie Wood, came out to say that she believes that Bitcoin could hit $500,000 per coin in the next 5 to 10 years. That represents upside potential of over 12 times in the next 5 to 10 years if her prediction turns out to be true. The last time Cathie Wood made a prediction this crazy was when she predicted Tesla stock would hit $4,000 per share in the next 5 years. And while the mainstream media was laughing at Cathie Wood and her prediction, I was actually very intrigued in what she was saying, and I took a deeper look into her research. I agreed with pretty much everything she was saying, and I started a position in Tesla stock. And here we are, just under 2 years later, I'm up over 1,500% on my investment in Tesla stock, and Cathie Wood's prediction came true 2 years early. Of course, after adjusting for the stock split that Tesla stock went through in the year 2020. But just as a friendly reminder, this is not financial advice. This is just me sharing Ark Invest research and my thoughts and opinions. Personally, I do believe that Bitcoin has a long way to go over the long term, and that it very well could be the currency of the future. Before I made my first investment in Bitcoin, it took me a few hours of podcasts, YouTube videos, and research to actually understand and to push myself to make that first initial investment, as it's not the easiest thing for most people to understand here today. But in this video, I'll be sharing with you guys a ton of information. But lastly, just before we get started, I'm going to put a link down below in the description for the Shakepay app, which is the actual application that I personally use to invest in Bitcoin and Ethereum. And if you invest your first $100 through my referral link, the both of us receive a $30 cash reward, which is basically a 30% return on investment after investing your first $100. And I think it's also important for me to mention that you could actually buy Bitcoin with under $10. You won't actually be purchasing an entire Bitcoin, but you would be purchasing a fraction of that Bitcoin. And I'll also put my referral link down below for COINBASE for anyone else that's outside of Canada. If you invest your first $100 through COINBASE through my referral link, you do get a $10 cash reward. We're finally going to jump into this video. I'm going to start off by showing you guys a video of what is Bitcoin for everybody that's new to the topic. And then we're going to jump straight into Ark Invest research, followed by a few videos that I believe everybody could benefit from to better understand Bitcoin. I really do apologize about the audio quality when I'm showing you guys these clips. Just recommend that your volume's not on full blast. And although the individuals in these clips sound a little bit like aliens, you should still be able to understand them. And I promise the information is worth it. But that's enough talking. Let's get right into the video.
What is Bitcoin? Bitcoin is the first decentralized digital currency. Bitcoins are digital coins you can send through the internet. Compared to other alternatives, Bitcoins have a number of advantages. Bitcoins are transferred directly from person to person via the net, without going through a bank or clearinghouse. This means that the fees are much lower. You can use them in every country. Your account cannot be frozen, and there are no prerequisites or arbitrary limits. Let's look at how it works. Several currency exchanges exist where you can buy and sell Bitcoins for dollars, euros, and more. Your Bitcoins are kept in your digital wallet on your computer or mobile device. Sending Bitcoins is as simple as sending an email, and you can purchase anything with Bitcoin. The Bitcoin network is secured by individuals called miners. Miners are rewarded newly generated Bitcoins for verifying transactions. After transactions are verified, they are recorded in a transparent public ledger. Bitcoin opens up a whole new platform for innovation. The software is completely open source and anyone can review the code. Bitcoin is changing finance the same way the web changed publishing. When everyone has access to a global market, great ideas flourish. Bitcoins are a great way for businesses to minimize transaction fees. It doesn't cost anything to start accepting them, and it's easy to set up. There are no chargebacks, and you'll get additional business from the Bitcoin economy.
So we're first going to start off by looking at Bitcoin's fundamentals and then Bitcoin preparing for institutions. Bitcoin's fundamentals. The price of Bitcoin has hit an all-time high, supported by robust network fundamentals. As Bitcoin's price hit an all-time high, Ark's research indicated that its network fundamentals remained healthy. Based on search volumes compared to 2017, Bitcoin's price increase seems to be driven less by hype. With Bitcoin appearing to gain more trust, some companies are considering it as cash on their balance sheet. If all S&P 500 companies were to allocate just 1% of their cash to Bitcoin, Ark estimates that its price would increase by approximately $40,000. So Ark starts this off by showing us how investors are more long-term focused when it comes to Bitcoin, and this isn't just a matter of hype and catching the next run-up. Bitcoin's market participants never have been more long-term focused. As of November 2020, roughly 60% of Bitcoin's supply had not moved in more than a year, a testament to the market's longer-term focus and a holder base with stronger conviction. So these purple waves represent people who have been holding Bitcoin for 1 day to 3 months. This green wave represents those people who've been holding Bitcoin for 3 months to 6 months. Red represents 6 months to 12 months. Yellow represents 1 year to 2 years. Blue represents 2 years to 3 years. Gray represents 3 years to 5 years. And black represents people who have been holding Bitcoin for over 5 years. And as you can see from this chart, over 60% of the people who've been holding Bitcoin have now been holding Bitcoin for over 1 year. Whereas in the past, like in 2014 and 2018, majority of the people that were holding Bitcoin were holding it for less than 1 year. So ARK is really showing us that the investor base in Bitcoin is becoming more long-term focused as more and more people understand Bitcoin. Next, they show us how Bitcoin's market and investor set appear to be maturing. Bitcoin's realized capitalization, a measure of holders' cost basis, has hit an all-time high. A growing cost basis suggests that early investors are taking profits, while newer investors are establishing positions and creating higher support levels. And in the next slide, Ark Invest shows us how Bitcoin search volume compares to what it was back when it hit all-time highs in 2017. So as you can see, in 2018, when the price of Bitcoin exploded, the Bitcoin price search volume exploded as well, even above the levels of Bitcoin's price. But as we can see here, the search volume in late 2020 was still relatively low, even though Bitcoin was about to break its all-time highs. And what this shows me is that this is less of retail investors getting super excited over Bitcoin, and this is higher net worth individuals and larger institutions buying up Bitcoin in bulk. And it's not driven by a lot of us little guys talking about Bitcoin, searching about what is Bitcoin, how do I buy Bitcoin, etc. This is actually larger institutions and higher net worth individuals buying up Bitcoin. And even though it's now exploded past its all-time high, the search volume for people looking up Bitcoin is still significantly much lower than what it was back in 2017, as we can see based on this chart. Then ARK says Bitcoin's increasing acceptance has set the stage for Ethereum and a new wave of financial experimentation. We believe that decentralized finance, DeFi, has been a positive catalyst for the increased adoption of Ethereum's network. By leveraging Ether as a trust-minimized collateral, market participants can disintermediate traditional financial companies and access financial services like credit and lending, market making, trading, custody, investing, and access to synthetic US dollar exposure. Ethereum is by far the second largest crypto asset, and it recently just broke its all-time high. And in the last year alone, Ethereum is up over 680%. So Ethereum is actually much more complicated than Bitcoin. And yes, I know that might be hard to believe, but it is. But here it says that Ethereum is the foundation for a digital future. Ethereum is open to everyone. All you need is a wallet to take part. It's banking for everyone, a more private internet, a peer-to-peer network. It's censorship resistant, commerce guarantees, and compatibility for the win. So while we think of Bitcoin as like digital gold or a cryptocurrency, Ethereum is more of a digital platform. And in my opinion, I believe that Ethereum could even have more upside than Bitcoin over the long term. And that's why I'm keeping half of my cryptocurrency portfolio in Ethereum and the other half in Bitcoin. And then on the last slide, Ark covers how big the opportunity could be if corporations started converting some of their cash into Bitcoin. Square, a company I'm actually invested in that also owns Cash App, and MicroStrategy, both with balance sheet investments in Bitcoin, are showing the way for public companies to deploy Bitcoin as a legitimate alternative to cash. According to our research, if all S&P 500 companies were to allocate just 1% of their cash to Bitcoin, its price could increase by approximately $40,000. That's a double up from the price here today. So if just the 500 companies that are included in the S&P 500 were to allocate 1% of their cash to Bitcoin, the price could increase by $40,000. They were to go as far as allocating 10% of their cash to Bitcoin, the price could increase by $400,000. And that's just the companies within the S&P 500. Next up, Ark Invest covers how Bitcoin is preparing itself for institutions. Ark believes Bitcoin's rapid growth has positioned it for an allocation in investment portfolios. We believe Bitcoin offers one of the most compelling risk-reward profiles among assets. As our analyst suggests, it could scale from roughly $500 billion to $1 trillion to $5 trillion in network capitalization during the next 5 to 10 years. As of recording this video, Bitcoin's market cap is about $650 billion, but they're basically saying in the next 5 to 10 years, based on their research, they believe Bitcoin could hit $1 trillion in market cap to $5 trillion in market cap. And market cap is basically total value of all Bitcoins. This is basically saying that they expect a 2x to a 7.5x in Bitcoin's price over the next 5 to 10 years. In our view, capital allocators should consider the opportunity cost of ignoring Bitcoin as part of a new asset class. So they start this section off by showing how Bitcoin continues to gain credibility from regulators, banks, institutional investors, and public companies. So on the regulation side, the OCC permits federally chartered banks and thrifts to provide custody services for crypto assets. That was in mid-2020. The OCC also permits national banks and federal savings associations to hold reserves on behalf of customers who issue stable coins. That was in late 2020. OCC permits banks to run nodes on public blockchain networks to streamline payment functions like processing, validation, and settlement. That was in early 2021. Clearly, since late 2020, regulators are paying very close attention to Bitcoin. And if you don't know who the OCC is the world's largest equity derivatives clearing organization. OCC is dedicated to promoting stability and financial integrity in the marketplaces that it serves by focusing on sound risk management principles. You could look into this further on your own, but you could see that the OCC operates under the jurisdiction of both the SEC and the CFTC, and they're a registered clearing agency under the SEC jurisdiction. Then from the bank side, JP Morgan adds major cryptocurrency exchanges Coinbase and Gemini as banking clients. That was in May of 2020. And then Singapore's largest bank, DBS, announces plans to launch a cryptocurrency exchange. That was in October of 2020. And then Kraken becomes first cryptocurrency exchange to charter a US bank. Here are some institutional investors and high net worth individuals that we would never expect. Macro investor Paul Tudor Jones discloses a 1% allocation to Bitcoin on May 11th, 2020. And then billionaire Stanley Druckenmiller places a bet on Bitcoin on November 17th, 2020. Then Fidelity Digital to hold a Bitcoin as collateral for cash loans as of December 9th, 2020. And also insurance giant Mass Mutual invests $100 million into Bitcoin as of December 10th, 2020. And this is what's really going to speed up the adoption, in my opinion. On the public company side, meaning companies that are traded on the stock market, MicroStrategy substitutes $500 million in cash for Bitcoin on July 20th, 2020. And then a company that I'm invested in 3 months later, Square, invested 1% of all of its assets into Bitcoin. About 1 week later, PayPal announces cryptocurrency buying and selling services. And as you can see here from this chart, since PayPal launched their crypto buying and selling services in November, Bitcoin just really started to take off. And I think that this news really gave Bitcoin a lot of validation and access to a lot of individuals. And when the richest man on earth, Elon Musk, adds Bitcoin to his Twitter bio, it's something to pay attention to. And just last week, Elon Musk said that he was a supporter of Bitcoin and believes it will get broad acceptance in finance. And this is one of the reasons that I think that Bitcoin should be in everybody's portfolio. And that reason is because of its low correlation versus other asset classes. So this purple color means that it has low correlation versus all of the other assets. If it's gray, it means it has medium correlation. And if it's green, it means it has high correlation. So Bitcoin doesn't move up and down with the other asset classes like the S&P 500, bonds, gold, oil, emerging market currencies, real estate, or stocks like Tesla, Apple, and Bank of America. Everything else here has moderate to high correlation with all of the other asset classes. It has very low correlation with all of the other asset classes and just moderate correlation with the real estate market. So say we were to have a financial crisis and everything was to come crashing through the floor like it did in 2008. While a lot of your other investments are going down in value, your Bitcoin investment has the least potential to follow that trend. So if your Bitcoin investment is going up while everything else is coming down, you could sell off some of your Bitcoin investments to buy up some more real estate or stocks for a lower price. So although Bitcoin is seen as a very volatile asset, it could actually lower volatility in your overall portfolio if you strategically allocate, say, 2 to 6% of your portfolio in Bitcoin. So based on daily returns across asset classes during the past 10 years, our analysis suggests that allocations to Bitcoin should range from 2.5% when minimizing volatility to 6.5% when maximizing returns. So if you're looking to just minimize volatility in your overall portfolio over the long term, they're saying that Bitcoin should make up about 2.5% of your portfolio for best results. And if you're looking to maximize returns with Bitcoin with the least amount of risk, you should be allocating about 6.5% of your portfolio into Bitcoin. So to get those numbers, they ran a Monte Carlo simulation of 1 million portfolios composed of various asset classes. In this last slide, Ark Invests again sizes the opportunity, and they say that institutional investment could have a substantial impact on Bitcoin's price. So purple represents the high net worth individual, so people who are worth millions of dollars plus. Green represents the mass affluent, so people who are making, say, over $100,000 a year. Pink or red, whatever that is, represents the pension funds. The black bar represents insurance companies, and the blue bar represents sovereign wealth funds. So according to Ark's calculations, if these individuals were just to allocate 1% of their wealth into Bitcoin, Bitcoin's price could increase by about $80,000, which is more than triple of what the price is here today. If they were to allocate 2.55% of their wealth, Bitcoin's price could jump by $200,000. That's just by allocating 2.55% to get the minimum amount of volatility and highest return potential managing risk. But say they were to allocate 6.5% of their wealth, Bitcoin's price could jump by $500,000. So that's almost everything that Ark Invest covered in Big Ideas 2021 surrounding Bitcoin. But I'll actually go ahead and link the full PDF document down below in the description. Before we wrap this video up, I just want to share with you 2 more clips. Number 1, a quick clip of Gary Vee's thoughts on Bitcoin and blockchain technology. And number 2, a clip of Cathie Wood explaining why Bitcoin cannot be shut down.
I think blockchain is the technology right now that has the most potential to disrupt society. I think people are grossly underestimating what it means, what it's doing. Blockchain is creating infrastructure around trust, and trust between all of us with each other, with nobody in between, not central banks, not leasing companies, not even governments. I think that it has the potential to create the global next war because it's so big.
The potential to create the next global war. That's a big statement. And in this video, Cathie Wood is comparing Bitcoin to Facebook's cryptocurrency Libra.
What's so interesting about that is there's no choke point. You know, when China tried to shut down Bitcoin, basically in various ways shut down mining and trading, it migrated to Japan, South Korea, Vietnam. They became centers. So it's like, I don't know if you have the game Whack-A-Mole, you whack this one, it'll pop up somewhere else, right? And that's what's happening with it because it's decentralized. There's no choke point.
So I'm just going to close off this video by answering the question, is Bitcoin and Ethereum a buy right now, still at these levels? In my opinion, even though Bitcoin and Ethereum are close to or have just passed their all-time highs, I think that they still have a long way to go over the long term. And with any investment, you always have to look at the risk versus reward. And I think at the very least, Bitcoin and Ethereum should each at least represent 1% of an individual's investment portfolio. I personally have 2.5% of my investment portfolio in Bitcoin and 2.5% of my investment portfolio in Ethereum. But it's also very important to remember that these are very volatile assets. But what I'll be doing if we get another large dip in Bitcoin and Ethereum is that I'll be building up my position back up to 5% because I personally have strong conviction in these assets over the long term. But thank you so much for joining me in this video. I hope I was able to get you to hit that like button and to subscribe to the channel. Thank you for watching up until this point and have a blessed night. Hey, yo, buy crypto. Just make sure you hit the link down below. Nah, but for real, if you're looking to invest in cryptocurrencies anyways, I do have my referral links down below. You might as well sign up through those links to get the free cash that comes with it. But just remember, none of this was financial advice and you should always do your own research before making any investments.